Hello, fellow Robo Capitals. Hope you're well. So, big news in the used car market. CarMax down 20% today. And this is after Tricolor filed for bankruptcy just, what was it, last week or the week prior? So, we have to ask ourselves, what does this tell us about the economy? But wait, there is more. We have data coming out today about initial claims and the GDP numbers, which, to say the least, don't jive with what's happening with CarMax and the used car market. So we've got to put all these pieces of the puzzle together to try to determine what on earth is not just happening with the economy right now, but what is likely going to happen in the future. So let's get started by going over the Market Watch calendar and check this out, guys. I don't know if you've been following interest rates today, but they have skyrocketed. Why? Did Scott Bessent issue $1 trillion at the long end of the curve? No. Did we explode the deficits today? No. We do that every day. What actually came out is growth and inflation expectations improved dramatically. So right here, initial jobless claims down to 218. 218, guys. Now, this is not a historically low number, but the trend is starting to go back down, which means maybe the jobs market is strong and resilient. I mean, I hate to say that, but here's the data right now. We've got to look at everything, not just the bullish stuff, not just the bearish stuff. So let's look at the third estimate for GDP Q2. Expectations of 3.3 came in at 3.8. 3.8. So as a result, durable goods orders, by the way, expectations for a negative 0.4. We had a positive 2.9. And then you get existing home sales, a little bit of a beat, but I don't think that really impacted rates too much. But the bottom line is when the market saw the initial jobless claims and the GDP revision, interest rates skyrocket. Why? Growth and inflation expectations, just like we said earlier, and why basically what I say on every single one of my videos. So how much did rates go up? Look at this 10-year up 2.4. So not a lot, but what's really interesting here, guys, is the bear flattener. The bull flattener. I get all the flatteners and the steepeners all confused, but this is a bull flattener. So we've got the 2-year going up more than the 10-year. So this would be, or is that a bear flattener? Anyway, the curve's flattening out. That's the bottom line. And this is great because I had a position, a steepener trade on where I was long the 2-year and short the 10-year. So this might be giving me a good opportunity to get back in that trade. Well, not investing advice, just kind of letting you guys know what I'm doing with my own portfolio. Okay, so now that we see the good news, that's why interest rates went up today. This is maybe giving us a hint that the economy or the labor market might be improving. Now, does this change my base case that it's actually deteriorating? No, it doesn't. Why? Because we have all this other data that would suggest otherwise. So check this out. Look at a chart of CarMax right here. This is not where you want to be. This is the no bueno zone, down 44% this year. But let's look just today. Yeah, well, it opened up the day way down over 20%. In the last 5 days, it's down 23.95%. 23.95%. Wow. That is pretty crazy. So it's trading at 45, and this is as a result of just terrible numbers and what the CEO was saying about the used car market. And I think the used car market is very similar to the restaurant performance index, where it's one of these data points that I think really reflects what's happening with the underlying economy. But I would say that about the labor market as well. And we had initial claims at 218. So a lot of different information here, but I don't know that the conclusion can be, oh, well, the economy is in fuego. So let's go over to CarMax here, plummets 20% following challenging quarter. So key talking points, like we said, down 20%. Some nitty gritty here with the numbers. I guess the street was expecting $1.05. It got 99 cents. And revenue roughly 6.6, street expecting 7.02. I think what's more important is what the CEO said. And let's get into that right now. So CarMax shares early in the day are trading at 45. The stock's lowest price since March of 2020, the cerveza sickness. The stock is down about 46% this year. Okay, we went over that. CarMax CEO Bill Nash described the fiscal second quarter that ended August 31st as challenging in the company's quarterly release. He cited changing market expectations, a pull ahead in sales. In other words, you're bringing demand forward. That was from the tariffs. So everyone's trying to front run the tariffs. They're buying, and you bring all that demand forward. So then when you get to the future, no more demand. Here's another quote. For the quarter, each month was down year over year, and each month got a little weaker throughout the quarter. I think that's important information as well. So it wasn't just all about the tariffs. It's you see the trend. But certainly, we put ourselves in a better position with the start of this quarter, both in inventory positions as well as from a pricing standpoint. I wouldn't hold your breath on that, my friend. So the whole auto sector, at least used cars, is just getting the right hook from Tyson. Carvana, Lithium Motors, AutoNation, Group 1 Automotive were all down by roughly 5% or less. That's a big spread. But yeah, let's go over to kind of a recap as to what else is happening in the used car market. And that would be the complete and total collapse of subprime lender Tricolor. And so we discussed this, I think it was last week, but if you haven't dove into this, you really should. And the debate here, why is this blocking me? I subscribe to the Wall Street Journal. The debate here is, okay, did Tricolor go bust because they were lending to illegals or just immigrants who all left and left them holding the bag? And then even if that's the case, then what's going on with the counterparty risk with the banks that they were using and the pension funds, the balance sheet, the other financial institutions that had, let's just say, systemic risk to their balance sheet. Another thing is, okay, let's just assume that's true, but what does that tell us about the overall economy? Like if you have, I don't care if they're immigrants, I don't care if they're illegals, I don't care who they are. The bottom line is if you have 1 million people leave or 10 million people leave, they ain't spending money here anymore. And so I know a lot of people say, well, that's great. Okay, that's fine. But it ain't great for GDP. And therefore, it's not going to be good for the economy, at least in the short run. And so I think that's what we see here. But the counter argument would be, no, it's not just because they're lending to immigrants. It's because their whole business model was taking it on the chin because they were lending to subprime borrowers, American citizens and non-citizens. So when you look at everything in its totality, it's not just the foreigners who stop paying. It's the American citizens, the subprime people that have stayed in the United States. They're not paying either. And this is what led to the overall bankruptcy. Now, I would probably lean more toward the latter. And before I saw CarMax today, it probably just would have been 50-50. Like, that's a coin toss. I don't know which one it is. But now I'm kind of leaning toward this is more Tricolor, is more of a representation of what's happening with the economy, especially kind of at the lower end of the economic totem pole. let's say, with the poor and middle class. So now and what was really surprising is I didn't see anything kind of that would on let's go over to Zero Hedge. I didn't look on Zero Hedge. What I was saying is I was very surprised that we didn't get something on the Wall Street Journal about that. Maybe they did, but I didn't see it. And what I want to do, if I want to scan Zero Hedge here really quick. But after this, I also want to go over what's happening with the dollar, because that's a big reflection of what's happening with interest rates because of those differentials. And then what is happening with Bitcoin. Bitcoin is taking it on the chin. So let's see here. Anything on CarMax? That's really surprising. Huh. I don't see anything on Zero Hedge. Okay. So let's go over to the dollar, which way up today, almost at 98.5. And this, I think, is a result of interest rates going up. The expectations for interest rates staying higher for longer definitely increased today. And therefore, if you had, this is an exact number I was throwing out there for the sake of the example. Well, let's just say that you had a 2% spread priced in to the Fed versus the ECB. And now all of a sudden that 2% spread went to a 2.25 or something like that in favor of the Fed, then that's going to really add strength to the dollar. Now, over the long run, I don't think this is the overriding factor. This meaning interest rate differentials. I think it's more so the structure of the monetary system. But in the short run, 3 months, 6 months, this definitely plays a role. And I think if you kind of zoom out and let's look at a 6-month chart. And this decline is pretty much all about interest rate differentials, because during this time frame you saw interest rates go down quite substantially, especially after right around, call it May, June. So now let's think that through in terms of what's happening with Bitcoin and MicroStrategy as well. So I want to go over to CNBC. Bitcoin down. It's getting really close to support levels. And if it breaks through the support, probably not good short term. I'm not saying that I'm bearish Bitcoin or anything like that. I think everyone should own Bitcoin to have purchasing power outside of the system, not necessarily because the price is going to go up or down or whatever. I'll let you be the judge of where you think the price is going. But just in terms of the chart, you can see where you've kind of got resistance right around, or support, excuse me, right around 107, 108. So if it dips below that's not good. It's not going to be good, at least in the short term. And, most people I think are kind of a hodler. But another thing that really worries me about the price of Bitcoin is you have all of the tailwinds from the Trump administration, from the strategic reserve, possibly, or at least that narrative, from all of these companies putting Bitcoin on their balance sheet, turning themselves into a Bitcoin treasury company. Obviously, you've got MicroStrategy out there buying literally billions of dollars worth of Bitcoin every single week. And you don't really see the price reflecting that. So what's happening is obviously there's a lot of people buying Bitcoin, but at least in the last, call it 3 months or so, there's been just as many people, if not more people, selling to the same degree to which all these Bitcoin treasury companies are buying. And so I don't know. You could look at that in a bullish way and a bearish way. The bullish way would be, okay, well, all the weak hands are selling into this buying from the Bitcoin treasury companies. So once that selling is exhausted, then the buying is the only thing left in the market, and then the price moons. That would be the bullish argument. The bearish argument would be that with all these tailwinds, it still can't increase in price. And therefore, the market is telling us that over the next, 6 months, year or so, the trend is down, and it's likely going to go lower. But I think a big reason why it's down today, huge, is because of interest rates. And over the long run, I don't think that'll really impact the price of Bitcoin. But obviously, in the short run, just like the dollar, I think it's a huge headwind, just like it's a huge tailwind for the dollar. It's almost kind of like the inverse relationship there. And then you don't need to look at a chart of MicroStrategy, but it really tanked today. And it was extremely volatile. I don't know, who knows where it is today. It could be up right now, as far as I know. But at a certain point in the day, it was down like 9%. And it just, I mean, that's a completely separate video as far as that topic. But I think this is really interesting. This price action we're seeing not only in the dollar but in crypto and Bitcoin, because it's just kind of showing you what the market expectations for interest rates are right now and how they change dramatically today based on what we were talking about on the calendar with the revised GDP and the initial claims going down to 218. But how the market could be misinterpreting that because of what we're seeing in the used car market, which I think is probably a better reflection of what's really happening with the consumer, along with the restaurant performance index, than anything else. And just full disclosure, guys, I'm long Bitcoin and I'm short MicroStrategy. So I'm kind of playing that spread trade, if you will. And if you guys want more information about kind of the trades or mentorship or contrarian strategies or anything like that, I've got a private investing community with Lynn Alden and Chris McIntosh, my good friends. You can check that out. Josh will just put a link in the description below. All right, guys, enjoy the rest of your afternoon. As always, make sure you're standing up for freedom, liberty, free market capitalism, and we'll see you in the next video.